Aloha everyone, Joshua Hayes at BigWaveTrading.com. I want to try to keep this video under 10 minutes, but I don't know if I can because I want to really hammer these points home. The relentless nature of this selling is beyond anything I expected. When we started to pull back in March, I thought we would bounce here. I thought we would bounce here. I thought we would bounce here. Yet 3 different times when normally we would have bounced, we have not bounced. So to think that we're going to bounce here at the 200-day moving average in the February lows seems kind of foolish for me, but that's the next support levels that I'm looking at for a possible bounce. But following today's session, I have to admit I'm on the complete wrong side of the market when it comes to just my overall operating. Now, I still have small hedge positions, and let's not forget, today, intraday, my SPY put trade of the day that once again I was not able to get off due to managing positions in the morning. It moved 200% intraday. That's now the third session during this downtrend that the SPY put trades of the days that I've told the chat room to focus on have returned over 100% during this downtrend. And in the middle of that, on this day right here, the 26th, the SPY trade of the day was on the call side and it moved up 100%. So that's 4 100% plus moves in the SPY trades of the days since this March top, which continues to prove to me over and over and over, as it has basically since 2013, post 2013, that the only real way to make extreme alpha in this market is day trading. And on that end, there was only one stock in play today based on the proper news and catalyst, SLS, and it worked. And we had a chat room member make money, but the thing moved from 5 to 1060 intraday. Those are the kind of moves that are only happening intraday. There's almost little to no follow through. Signals fail left and right. And that brings me to my next point. During this downtrend, like every previous downtrend, I do not receive a lot of signals. I received quite a few signals I believed back during this downtrend, and look what it led to. Received signals down here, look what it led to. That's normally what happens during a pullback. When the market pulls back and I don't receive long signals, then I know we're looking at price action like this. The market hasn't pulled back on me while triggering long signals and being a mixed bag into completely failing like it currently is since 2007. And even back in 2007, off the top of my head, I can't remember it being like this. The nasty pullbacks in 2011, 2012, and 2015 that did occur, they came with such quick velocity and with fear and VIX spiking that it was a normal panic driven sell off. The few long signals that showed up either worked or failed, blah blah blah, but bottom line is that not a lot of signals even triggered during the 2011, 2012, and 2015 ugly pullbacks that we did have during that time. This is the first downtrend in over 10 years that I've received a ton of signals with now the vast majority failing. So right now, long positions, if you're new traders, as I've been saying anyways for the past 2 weeks, should not be taken. I've told you guys over and over. Have you seen me put more than 5% of my account capital in any new long position since we rolled over from the February highs? No. That's your tell that I don't love anything triggering. But the reward risk ratios were too great to pass upon, and I would have felt like a damn fool had I not taken any of those long signals the past 2 weeks. This market would have bounced and rallied higher to new highs, and those long positions would have moved 20% plus in 2-3 weeks. I would feel like a damn fool. On the flip side, cutting my losses short, it don't bother me. Now, cutting so many losses short, becoming the death via 1,000 paper cuts, yeah, that has hurt. For the first time since 2012, I have ended the first quarter of the year in the red. Following today's session, I am now down right around 2% year to date in my end of day trend following accounts at Interactive Brokers. That's the first time that's happened since 2015. If by chance all hell breaks loose and I have to cut losses in all of the positions I'm still long, which is way too many, I could possibly be down 5% year to date, even with my hedges. Now, if I start actually getting these SPY trades of the days, entries like I want, and I'm able to trade them, that probably won't happen, as it'll take care of some of the losses. But overall, this should be a huge tell that something wrong. I want to remind everybody before I move on, I have not seen a period of March and April like this since the year 2000. You can go back test your charts, back test your index charts during March and April. You will find nothing like this since 2000. 2000 was the last time. I haven't seen persistent, slow, methodical, dreary selling without any panic like this since 2008 and 2001. The end of 2000 into 2001. This is how 2001 traded. This is how 2008 traded. No bounces, no real panic selling, just constant dreary distribution. So with that being said, like I've been saying the past 2 weeks, cash is king. New traders shouldn't be taking new long positions. If you do, only obey the first cut loss level. Definitely do not be putting 10 to even 5% of your account capital per trade. You're just going to be messing around right now if you're trading just to keep your toes in the water like I like to do. But at the same time, I take these trades expecting to make money. So the one new long position, MOV, this is an earnings winner. This is an earnings winner, gapped up, held the lows pretty well intraday today, undercut them, rallied back, and now as you can see, closed higher than where it opened on above average volume while holding max green bot. Good enough. This is in my CanSlim scan. It's in my perfect speculator scan. It's in my new 52-week highs on above average volume scan. It's in my price volume BOP scan. It's in my tertiary scan, and it's an earnings winner. I'll take a shot with 1% of my account capital. Now, normally, in the best of the best of the best of the best markets, how much would be allocated? Well, 5% for being CanSlim, 5% for being perfect speculator, 10%, and 1% each for each additional scan. This could have been up to a 13% new long position in a strong market for someone like me, the way I trade. But in this tape, all new long positions, 1% or smaller. That's it. So MOV, 1% of my account capital, limit order, 38.50. The only cut loss I want you to pay attention to is this one right here, 37.25. It moves below 37.25. You'll be all out. I will have a second stop. Not even going to mention it. If you don't know where I'm going to place it, great. I don't want you to know because it's a little deep. And what I'm going to do is if this level fails, whatever the new low a day is, that will then become my final stop. But I'm going to give it some room to work since it's an earnings winner gap up in a rough market. The other long position, ad signal, ERN. Look at this. Beautiful previous uptrend, beautiful cup, beautiful handle, pocket pivot point signal, above the 50-day moving average. Small, subtle BOP confirmation. Want to add to my ERN at 370, my first cut loss level right here. 353, my final cut loss level right there, 339. So if ERN doesn't move immediately, I risk about 6% on 0.5% of my account capital. That's the most an ad signal can be here, folks. Can be no more, no less. So, want to move away from those really quick. Move on to the sell signals. VAC is finally a failure, closing below the recent lows on above average volume red BOP. Confirmation closed below the 50-day moving average. VAC is a full sell. IBCP closing below the recent lows. Confirmation closed below the 50-day moving average on above average volume. Full sell. I'm all out of VAC. I'm all out of IBCP. If you have it, today's low day, minus 1 cent or 5 cents. And that's it. KFRC, full sell. I still have a position. My final cut loss level is now today's low of day. Quad, finally a full sell on the end of day basis. Already out. HCLP, full sell on an end of day basis. Already out whenever it moved below the February lows right here. PRTY, fail. Was knocked all out today. Once again, move your final stop today's low of day. USAT, I was knocked completely out today. Once again, move your final stop to today's low day. NKTR, damn, but I still had some stop here. I'm moving that stop to right there, today's low of day. TTI, something I did not expect, screwed up. As I said in the video this weekend, your final and only stop should have been 359. It was going to be mine, but I figured there's no way this thing is going to back and fill all the way on day one. Damn it, it did. It just barely missed my final cut loss limit, so I can't move it, but going to take about a $200+ loss in TTI. And it's not, I didn't even want to lose 100 in this name. So this is an outlier, no good. Final cut loss, today's low a day, which also matches up to these recent lows here. And then that's it, actually. TTI, that's the final sell signal. So once again, as you see, not a lot of full sell signals, a ton of 50% sell signals. But I'm not in a whole lot of these that you're going to see for 50% sell signals. Like MFIN, I still have. CBay, I was knocked out today. SGY is a 50% sell signal. I was knocked out today. Kuro, MGRC is 50%. DEN, FC still have positions. RRR 50%. CHGG still have positions. But no matter what, on any of the stocks you see on the new positions page, if it's a 50% sell signal, no matter what, you need to move half of whatever you have to 1 cent below today's low a day. And I recommend completely avoiding all new long positions from here on out until the market reverses higher and prints a day like this on heavier volume. If you don't see a day like this or a day like this on heavier volume than whatever sessions we're having here, just stay away. Safety, safety, safety. Protect, protect, protect. Raise those stops. Don't let large losses turn into small losses. Don't let gains turn into small losses. All right, got to wrap this up. Aloha.